Hello and welcome to this Tuesday's morning market briefing. Got lots to talk about, but firstly, Israel has imposed a complete siege on Gaza as Hamas threatens hostages, and this is including cutting all electricity, food and water to Gaza as the war between Gaza and Israel continues. As well as that, rising interest rates have curbed lending growth for big banks. As well as that, we've got lots to talk about in charts, which we'll come to near the end, as well as lots happening on the economic calendar with lots of data coming out today. So stay around to the end till we go and talk about that. And at the end, we'll also be going and looking at the price of oil and how it's changed as a result of this invasion by Gaza into Israel's territory. But first to talk about, of course, is Israel. Now, Israel imposed a complete siege of the Gaza Strip, also mobilizing a record 300,000 reservists. And this is what we spoke about yesterday, is this siege and issue between Israel and Gaza, where militants from Gaza did storm Israeli territory, massacring and murdering civilians en masse, as well as, hurting and killing, Israeli soldiers as well. And this as a result has created, a monstrous response from the Israeli government and IDF, where essentially they have responded with heavy artillery strikes, missile strikes, and just bombings of Hamas targets within Gaza. That said, because of how densely populated Gaza is, whenever these attacks are made by the IDF, even if they do warn them, this ends up still hurting civilians around, killing children, and killing, civilians which didn't want to make anyone be harmed. So it's very sad to see that. Now, this comes as the Israeli military has pummeled the Hamas-controlled enclave by air, as the Palestinian militant group threatened the lives of dozens of hostages. And this is what we spoke about yesterday, is, the 100+ hostages which have been taken by Hamas and brought into Gaza following their storming of Israeli settler territory. They took women, children, men, and former or currently serving IDF soldiers back into them with Gaza, even parading dead soldiers around with them, and as well as that, they were beating them, and now they are holding many of them hostage. Following attacks by Israel, counterattacks by Israel, they have proceeded to kill some of the hostages as well, and all of this is mounting up to be a very, very, distressing conflict, with Israeli Prime Minister Benjamin Netanyahu saying that the campaign was just getting started, as he vowed a difficult and terrible experience for Hamas. And we've been expecting this since the start of the conflict, with Israel of course going to respond heavily. There has been some talks of peace talks, but these are really just formalities, and it does seem that Israel will be making a land invasion into Gaza, which has kind of been its own bit of territory for some time now. In response, Hamas said it would execute every captive for each new airstrike that hit Palestinian civilians and came without warning. And we can expect this, to be kind of used as a justification for killing, any hostages whenever Israel even tries to target, Hamas institutions, because obviously if you're trying to, attack enemy military target, giving them a warning kind of defeats the point of trying to hit them with a missile. Now, with the group Hamas abducting at least 100 people, including women, children and Israeli soldiers, as well as foreign nationals, as I mentioned earlier. And these, are including civilians from the US. I believe it's around 12 civilians from the US, 2 from the UK, or possibly 1, 2 from Ukraine, and many, many others, sadly, as well as, obviously the Israeli citizens along with them. Now, more than 1,100 people have died since Saturday, including more than 700 Israeli civilians and troops, and 560 deaths in Gaza, according to official figures. So lots of people dying, and with many saying, this is really the 9/11 for Israel. They're kind of experiencing this mass terrorist attack, and in response, the terrorists, this being Hamas, are now receiving, the kind of response which, Osama bin Laden and Al Qaeda did feel following the invasion, not invasion, but the 9/11 attacks. Now, as fighting raged on Monday, Yoav Gallant, Israel's defense minister, said that he ordered Gaza's complete siege. Now, he added there would be no electricity, food or fuel delivered to Gaza, saying, "We are fighting barbaric terrorists and will respond accordingly." And this is kind of, despite the conflict that's at play here, it is still surprising to hear that sort of rhetoric, with some even comparing it to being a war crime, as a result, because, you're kind of mass condemning a group of civilians still, that do exist within Gaza. It's a densely populated area, and, many of the civilians have had no involvement in these attacks, and therefore by, restricting their ability to survive, it could be considered as a war crime. Now, he also cutting, as I said, the water to Gaza, which is a home to 2.3 million people. Now you have to wonder, cutting the water supply, cutting the electricity supply, how will this affect hospitals and, any humanitarian causes? So it is a worry to be had. Now, Israel also called up 300,000 of its reservists, which is its largest, which was the largest in the country's history. So the biggest, kind of mobilization ever seen in Israel. With it now being almost certain that Israel will launch its first ground offensive into Gaza in almost a decade, with the IDF spokesperson saying, "We are going on the offensive." And this is really, worrying rhetoric in relation to an escalation, obviously. It's kind of unsurprising that we're seeing this response, and, kind of justifiably even, because, what's happened is essentially Gaza's invaded Israel's territory, and in response now, Israel's going to invade Gaza. But this can only lead to more and more deaths, obviously, so it will be very sad to see at the end of the day. And obviously any escalations in this sort of offensive manner may draw in other countries, which we'll come to in just a second. Now, with the IDF, recently saying, that it had gained full control over communities near the enclave that had been infiltrated by Gaza militants at the weekend. And also its helicopters were striking in Lebanese territory to Israel's north. And so this is of large worry, really, with now Israel, attacking territories outside of its sovereign borders. It is a worry that this could cause escalation. Obviously, the targets attacked by Israel were Hezbollah, so, a kind of, internationally condemned terrorist organization funded by Iran. But that said, this is still an escalation of sort. Anytime you attack outside your country's border, obviously you're now, instigating a possible conflict with that other nation, that being Lebanon. So it will be interesting, and, keep your eyes on whether that escalates to anything further. And obviously, as I said, this risks the Lebanese-Israeli borders turning into a broader conflict on multiple fronts. And we've also had worries like that from Egypt, where, a policeman shot dead 2 Israeli tourists, the other day, as well as, Syria, Bashar al-Assad, having his own opinions on Israel and having issues over the Golan Heights, which are currently occupied by Israel. With the US seeing 9 citizens die as a result of Hamas, this is also fearing further escalation. And we have seen, the US sending in lethal aid to Israel, sending in, lots of cargo planes, as well as moving a carrier group from Sicily to near the Sea of Gaza. Now, as reverberations from the conflict spread, Chevron said on Monday that it had been instructed by Israel's energy ministry to halt production at its offshore Tamar gas field in the Mediterranean, but would continue to supply its customers in Israel. And now this is really the topic that we need to talk about in relation to the financial markets, with obviously any time that you cut the supply of a commodity, obviously you're influencing that price to rise, as demand in this scenario is remaining constant. And so if you're just reducing the supply of a good, then that's kind of causing prices to rise. And this is what we've seen over the last few days, especially yesterday because markets opened, but we basically saw oil's price skyrocket, reaching very high levels, which we'll come to analysing near the end, so stay around till you see that. But yes, essentially, this cut in oil supply is going to lead oil to be in a very interesting situation. Obviously, any escalation further within these, petroleum states will obviously cause a rise in the oil prices. And this led, EU gas futures to rise 16% and oil prices 4%. So it's already risen, and you can only imagine what further escalation might do to oil, which not only rises during conflict as a result of being a commodity, but also just as a result of all these nations really being hubs for oil production. And so anytime there is a damage to the supply network of the oil, then obviously that's going to cause prices to rise. But that's all to talk about as for Israel. Next to talk about really is rising interest rates and the effect of that on US banks. Now, slowing growth in lending risks curbing a key driver of profits for US big banks. Big US banks when they begin reporting third quarter earnings this week. So this is in relation to obviously the rising interest rates, which we've been talking about a lot recently, with the rhetoric from the Fed being very hawkish. So they're talking of raising rates further later this year and keeping rates higher for longer as a result of resistant economy, resistance jobs data, resistant inflation data, but strong, strong economic performance gives them that breathing room to raise rates further and keep them higher for longer. Now, the biggest US banks have benefited from charging more for loans in lockstep with the Federal Reserve lifting benchmark rates without significantly raising interest rates for savers. Now, weekly data from the Fed has shown credit card borrowing from consumers is still growing. However, corporate borrowing has fallen in the past 6 months, with analysts blaming rising interest rates. And this obviously isn't a surprise to us, with corporate borrowing obviously depending greatly on the low interest rates which we've been experiencing for some time now, and now that's changing. These big businesses aren't able to get those loans which they really need, whereas consumers kind of have that ability to take on that extra debt through their credit cards, and they're kind of happy to do that, whereas these big businesses obviously can't do that. They rely on their credit ratings and that sort of thing, and there isn't really the same options that a consumer might have. Now, according to Morgan Stanley analysts, the 25 largest US banks by assets had loan growth slowed considerably since the start of the year to about 1.5% from the year earlier, when it had been tracking at 8%. Now, banks have also become more selected about the loans that they make in anticipation for the proposed new US requirements for large banks. And obviously these would be requirements around capital liquidity ratios, so making sure banks are holding on to enough of their money to make sure there isn't a bank run, to make sure there isn't systemic risk and a bank failure. Now, analysts are now forecasting that only JP Morgan and Wells Fargo will be the only banks whose profits in the third quarter rose in the third quarter compared to a year earlier. So it is only JP Morgan and Wells Fargo which are predicted to see a rise. Adding to a squeeze on bank profits is pressure to offer customers higher interest rates to keep their deposits, which are the bank's primary source of funding. So they really need to hold on to those deposits, otherwise it's really bad for US banks. Now, concerns over interest rates staying higher for longer hit bank stocks last week, which have lagged behind the broader market. And we've seen that recently, and the banks will now face questions around how rising interest rates are affecting consumers who have been steadily spending down savings they've accumulated in the pandemic. So it'll be interesting to see, as we're coming out of that, as they're spending down their savings, how this is going to affect consumer markets and banks, which obviously rely on the deposits and rely on the savings of US citizens. So keep your eyes on that, certainly. But that's all to talk about on the articles, really. Next to talk about is the charts, where we'll also talk about oil in just a second. But first to talk about is US indices, which did open lower following the news around Israel. However, responded today with some bullish performance, likely as a result of Fed official rhetoric earlier this day. Now, we did see, as I said, this open far lower than where we closed last week, but in response to the Fed, they have risen, and now US indices have risen to the 78.6% Fibonacci area, tapping into that area of liquidity that we had highlighted prior. So it'll be interesting to see whether now it's kind of reacting to this area of liquidity and this area on the Fibonacci charts, whether in fact it will now roll off from this area and continue lower, in line with the fundamental image proposed by the escalation within Israel and the issues around rising interest rates in the US, which are likely. So keep your eyes on US indices, certainly. And we're kind of seeing the same performance mirrored across all US indices, where US indices opened lower and have now driven themselves upward throughout yesterday into these areas of liquidity. So it'll be interesting to see how that plays out today. So keep your eyes on US indices. But next to talk about really is the dollar, which of course yesterday, we weren't too sure on where the dollar might go. Obviously, following the invasion, the dollar's kind of the safest currency you could go with. So people were kind of saying, look, that's probably the most strong currency that's going to respond to these issues in Israel. That said, although it did rise yesterday, it did follow, it did also drop back down, and it's now, after bouncing off this upward trend line, it has made a lower high, bouncing off this prior area of liquidity, arguably, and rolling back down to the downside. So it'll be interesting now it's returning back to this area of liquidity where it's responded once before, whether it will kind of make a double bottom and move higher, or in fact it will continue lower, breaking below this trend line and continuing down. So keep your eyes on that, certainly. Now, as for Euro USD is obviously mirroring the image with the dollar, so it'll be interesting to see whether Euro USD can continue to make new highs if the dollar does fall off. Obviously today we do have the ECB's president Lagarde speaking, so her rhetoric obviously around interest rates, around the economy, will be very influential into how the euro performs today. So keep your eyes on that to try and see where the euro might head from here. So it'll be interesting to see how that plays out, because it did respond to this 78.6% Fibonacci area, moving to the downside. So definitely keep your eyes on that. As well as that, we've got pound yen, which is starting to range really. And the reason I say this is because although it broke below this trend line, and people were kind of saying, maybe it's time now for the pound yen to move to the downside after it kind of retouched this prior trend line, but on the opposite side, as well as visiting this area of liquidity, as well as touching that Fibonacci level around that area. this massive fall off below this prior area of liquidity, could be argued to just be a false breakout, because it was surrounding, the Japanese Bank of Japan's rhetoric at the time, which was very momentary and kind of, speculative, and, kind of wasn't in line with the actual market forces. Therefore, if you, consider this area as just a false breakout, then arguably, you could say that the rest of it is in a range, because ignore this, what's really happened is it's moved below this area of liquidity, it's bounced off this area of liquidity before moving higher to here, it's then moved back down, kind of false breaking out below this area of liquidity, but bouncing off this area of liquidity as support, and has now reached the top of the range once again. So arguably we're now once again, in this kind of range motion on the charts for pound yen. So definitely keep your eyes on that. It'll be very interesting to see how that plays out. So yep, keep your eyes on pound yen. Next to talk about also is USD JPY, which kind of has responded off this area of liquidity many times now, and this is why it's kind of in an interesting situation, because once again it's now returning to this level after making a lower high after reaching its greatest high on October 3rd. And it's kind of formed this downward trend line and is now reaching this area of liquidity. So it'd be interesting to see whether now it's reaching this area of liquidity once again, it will double bottom and move higher, or in fact it may break lower or continue to range until it touches the trend line again. So keep your eyes on that for USD JPY. Next to talk about, of course, is gold, which we did speculate would move significantly higher following the issues within Israel. Because obviously gold is a safe haven asset, so when there are these geopolitical issues, generally we will see gold respond in a very bullish manner, as I did say yesterday, as we did see following Russia's invasion into Ukraine, where gold revisited a high only seen at the start of the lockdowns during COVID. So definitely we could see much more greater bullish performance from gold as a result of these geopolitical issues. Of course, we also have to take into account, however, the strong dollar performance, which is likely as a result of raising interest rates, which are very likely within the US. And if rates do go up in the US, or rhetoric remains the same, that being hawkish rhetoric, then we are likely to see a weaker gold performance. But that said, what we're really seeing here is what's stronger, geopolitical issues for gold or dollar performance for gold. So definitely keep your eyes on gold to see which one prevails. And obviously if Fed rhetoric or economic data within the US does become more dovish, we will see really strong bullish performance from gold, because this large sell-off was as a result of the US Fed changing its rhetoric to being more hawkish, and this is kind of the gains for gold following the invasion by Gaza into Israel. So keep your eyes on gold. Certainly we're nearing the 78.6% area. It did break above the 61.8% area, so definitely keep your eyes on gold to see how it reacts to that area and to any data coming out soon. Lastly, to talk about, of course, the one that you've all been waiting for is oil, which has responded in a very bullish manner as a result of the recent issues in Israel, where basically oil had really sold off greatly, but as a result of this issue within the Middle East, we have seen the market gap open for oil rising tremendously. We're seeing this especially on Brent crude oil, which went from the kind of 84.9 mark all the way up until the $89 a barrel mark. So significant moves on oil, and this is only likely to increase higher if escalation does continue within Israel. This was, of course, as I spoke about earlier, in relation to the cutting supply. We did talk about how that was already happening within Israel, cutting supply of oil as a result of these geopolitical tensions and conflicts. So definitely keep your eye on oil. I mean, we could also, if it really does escalate further, we could be looking at reaching that $100 a barrel mark on oil. So obviously look out for any retracement opportunities, and just keep your eyes on the oil in general, because we did meet this area of resistance, this area of liquidity. However, we are kind of pushing back against that and trying to push higher, it does seem right now. So keep your eyes on oil, certainly. But that's all for the charts, really. Lastly, of course, to talk about is the economic calendar. We've got quite a bit of data coming out today, but really not too much. Now, firstly, to talk about, of course, is UK retail sales, which is coming out this midnight. So by the time this is out, obviously you already have that data. So make sure you know that. Make sure you know the result of that figure. As well as that, we've also got Italian industrial production, which obviously always plays into the way the ECB shapes its, monetary policy. Obviously, the German industrial production figures, which came out not too long ago, has massively affected the ECB's monetary policy, with it largely influencing its more dovish policy now as a result of German industry production, dropping, or at least worsening, especially in the car manufacturing industry, which did take a turn for the worst. As a result, they've turned this more dovish eye. So definitely keep your eye on industrial production. It's not expected to change at all month on month, with it expecting to decline by 5% year on year. So keep your eyes on that. As well as that, and possibly more importantly, we do have the ECB President Lagarde's speech today. She's monumental in deciding the ECB's monetary policy. Her rhetoric is the most important in relation to the ECB's monetary policy. So definitely listen out for that one. Keep your eyes on the news squawk, or just the news, to make sure you know what's going on in the ECB with her speech today. As well as that, we've got US wholesale inventories, so keep your eyes open for that. But as well as that, we've got numerous Fed official speeches. So we've got lots happening on the economic calendar as well today. So keep your eyes all on that. Keep your ears, listening. And yeah, that's all from us at Wildwood Capital. I hope you have a great trading day. See you later. Bye.